morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at banking sector results for two of our indigenous banks, and we're talking about First Citizens, or the First Citizens Group, as well as Republic Financial Holdings Limited. Now, both banks would have released their first quarter earnings for fiscal 2021, so that's the quarter ended December 2020, and there were some mixed results. So let's take a look firstly at First. And for that particular quarter, the group would have recorded or reported an earnings per share figure of just around 69 cents per share, which was a 22.5% decline from the 89 cents recorded in the prior comparable period. Now, just to recall that the prior comparable period would have been pre-COVID, or just before the peak of the COVID panic and pandemic in markets. So it does reflect a little bit what has taken place since. Now, net interest income was down just around 11%, from 429 to 381 million. Total net income, which includes fees and commissions, as well as net interest income, was down around 15.7%, from 620 odd million to just around 522 million. And the credit impairment losses did moderate. They actually decreased a bit from 19.3 million to 16 million. So overall operating profits would have declined just around 27%. And net profit attributable to shareholders would have declined at 21.9% from 222 million to 173.9 million. When we take a look at first profit before tax by segment, we can see that there would have been 3 consecutive quarters of growing profit before tax, and that would have now, well, the first quarter of 2021 would have bucked that trend, with PBT falling, and there would have been declines across all segments, particularly in the corporate and commercial banking, treasury and investment banking, as well as trustee and asset management segments, with retail and corporate banking falling from 272 to 212 million, investment banking falling from 85 to 75, and trustee and asset management on a quarter-on-quarter basis falling from 25 to 15 million. Now, what we can see is, which is an increasing trend across all sectors in Trinidad and on the Trinidad and Tobago Stock Exchange, is that investors are having to pay more for every dollar of earnings generated by companies. And we can see that clearly highlighted here in terms of First in that bright green column, where the price to earnings ratio for First stock would have increased from around 12.6% in that 2017 period considerably to the 19.4 times in the 2021 trailing period, which is still below the banking sector average of 21.8 times. But nevertheless, you can see that stocks on an absolute basis are becoming, a relative basis are becoming a little bit more expensive for the investor to purchase. So at the price of $42.74, First is trading at that price earnings ratio of 19.4 times, below the banking sector average of 21.8 times. But relative to historical valuations, it is trading at somewhat elevated valuations. So on that basis, given the economic uncertainty still ringing through the economy, but with some hope and expectation for some gradual normalization of economic conditions, Bourse is going to maintain its neutral rating on First for now. Turning quickly to RFHL, and the group would have reported an improvement in earnings per share of 4.8% from $2.29 to $2.40, with net interest income basically flat at around $1 billion and overall operating income declining just around 2% from 1.485 to 1.456 billion. Operating profits overall fell from 3.7% from 632 to 608 million, and net profit attributable to shareholders actually increased from 373.9 to 391.1 million. When we take a look at profit before tax across geographical segments, we can see that other than the Trinidad and Tobago segment, which posted a very healthy rebound in excess of 10% from 301 to 341 million, there were broad-based declines across most other segments, with the exception of Suriname and Ghana, which posted some modest gains, as well as that acquisition of the BVI, or British Virgin Islands franchise, from Scotiabank, which would have added overall to PBT. Again, as is the case with First, we can see that for Republic Bank shareholders, they're having to pay more per dollar of earnings generated at this point in time relative to historic levels. Republic Bank would have been trading at a price to earnings average of around 13 to 13.5 times between the period 2017 to 2019. But with the onset of COVID and the impact on corporate earnings, we can see that has elevated, that price earnings ratio has elevated to almost 24 times, which is slightly above the banking sector average of 21.8 times. So again, at that $134 or $135 odd dollar price, Republic is trading at a price earnings ratio of that 24 times above that sector average of 21.8 times. But on the basis of geographical diversification, some gradual recovery, though it will very likely be protracted, those elevated valuations, and again, that lingering uncertainty, Bourse is going to maintain its neutral rating on Republic for this at this point in time. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com or check out our website at bourseinvestment.com, where you can catch this and all of our other research absolutely free. And of course, you can catch us in today's business section of the Bigger Better Trinidad and Tobago Guardian. See you next week. This has been the Bourse Report.